Peace and power, and welcome back to KTsAlchmy. I'm Nina, Katie's granddaughter, and today we're on chart pattern number 29 and 30 in the big book of chart patterns. And so what you're looking at on the screen is an island reversal. And this is exactly how it would appear on the chart. The island reversal is non-directional. It is a reversal pattern. And so the directional bias is non-directional. Pattern type reversal. Pattern description: there is a price gap either up or down and then a subsequent gap back to the previous level before the initial gap, leaving an island in the price chart. The average length of an island just over a month, but can last as little as a single day to over 6 months. Volume description: volume tends to decline after the initial surge on the first gap and then expands on the second gap. Breakout confirmation: a gap to the previous level before the initial gap with above average volume. Measuring technique: take the range between the highest high and the lowest low of the island and subtract Take the range between the highest high and lowest low of the island and add or subtract that amount from the highest high or low, depending on whether it is a bullish or bearish gap. Statistical notes: pullback and throwbacks hurt performance, and short patterns with a wider range from high to low perform best. And so what you're looking at is how it would appear on the chart. This is also showing you what it would look like on the chart, including those gaps. This is also, again, what it would look like with the gaps in the chart. The next pattern is a pennant, which is bullish. The directional bias is bullish. Pattern type, a continuation pattern. And so pattern description: this pattern occurs within the context of a longer uptrend and following a steep, quick upward move. Following the move, the pattern then forms a short triangle formation with converging trend lines. The pennant portion of the pattern shouldn't last more than 3 to 4 weeks if on a daily chart. Volume description: volume tends to drift downward during the formation and expand on the breakout. Breakout confirmation: a close above the upper trend line drawn across the highs and with above average volume. Measuring technique: measure the length of the previous steep move leading into the pennant and then add that amount to the breakout level. Statistical notes: formations with more range between highs and lows perform better than shorter ranges. Pennant formations that break out in the direction of the prevailing market trend tend to perform better, and pennants without gaps tend to perform better. And so this is what the pennant would look like. This is a bullish pennant, and this is a bearish. And we know this as W's and M's. This is also what it would look like on a chart. And so I just want to make sure you all get a clear view. Peace and power, and I'm out.